Right, I was on mute there. Hi, I'm Joe Neighbour, Signal Centre, running through a presentation or webinar today on engulfing candles, and just going to run through some basics of those, how to use them. Just quickly get to the contents. So I'm going to talk about the introduction of engulfing candles. I'm going to talk about the psychology behind the candlestick itself. Going to talk about bullish engulfings. Going to talk about examples of how to trade that. And also bearish engulfing examples as well. So going to crack straight on. So firstly, the introduction. Now, engulfing candles, obviously a classic candlestick pattern, often used as a reversal indicator. There are various different reversal candles that you can look at. There's hammers, inverted hammers. There's clusters of candles, so Morningstar reversals, of which we will try and cover a lot of them over the coming weeks. If you have any questions specifically about this or any other candlestick patterns, then obviously feel free to reach out. But today, just talking about the engulfing candle, and that can also cross over into outside bars or outside candles as well. Now, an engulfing candle itself forms when a candle completely engulfs the previous candle. The body of the candlestick should completely cover the entire previous bar. So we have an example over here. The black candle is the reversing candle, so we're moving higher. This candle is therefore completely engulfed the previous candle, and then that has resulted in a move lower. The strict definition of an engulfing candle requires a gap, which we do have here. So this, the top of the body of the candle was the previous close. The next open is up there at the body of the candle, which has been a gap higher. Price has to gap below the low of a previous candle for a bullish engulfing and above the high of the bearish candle for a bearish engulfing, but that doesn't often happen now in markets. And the reason that is because a lot of markets are trading for extended hours. We don't often, the only sort of real gap in price that you get now is on a Sunday night when futures markets open. So a looser definition of an engulfing candle only calls for the body of the previous bar to engulf, and not including the wicks. So moving on, let's talk about the psychology of this pattern. Engulfing candles typically occur at the end of trends. This is when we want to be trying to trade them, when they're at the end of trends. And prices make moves above the high or the low of the previous candle, but instead of inducing panic in the buyers or the sellers, the price actually reverses and heads in the opposite direction. So if we think about this example here that we have on the right hand side, we are moving higher in price. We reach here a new high, we then gap higher, so the price has opened up here, it's gone on again to make a new high before then completely reversing and engulfing all of this candle here to the left and closing at a new low. So with that, then we've seen an extension of that, and for the move to then continue on lower. So that's an ideal example of a bearish engulfing in this example. The move higher or lower is fought. So often there's a bit of a battle going on here. So we're trying to push to new highs. So when we're pushing to new highs, that might encourage breakout traders to try and get long. But at the same time, it might also be where sellers are positioning themselves to get short. So there's obviously a battle going on here. When you see these engulfings form, clearly one side is winning out. And in this instance, when we see reversals like this, it's the bears that have won out on this occasion, forcing price action lower. And as we say, this can be a signal that the previous trend may well have ended. So in practical examples, this is a bullish engulfing candle that I've highlighted on a daily dollar yen chart. This goes back to simpler times, back in March last year. I put this presentation together a number of months ago, so just revisiting it today. But it's a nice clean example of a bullish engulfing candle. So we've seen a trend lower on the daily, and we've got this engulfing candle that's formed. So we've made well, we're down at the lows there, and we've engulfed all of the previous candle. And if you're then looking to trade that in isolation, which isn't always the best way of trading them, ideally you would like to use it in combination with some other bits and pieces, but I'll come on to that a bit later. So as you can see, we've been trading in a steady downtrend since mid-December 2018. This has continued into March, and then we get this bullish engulfing candle appear on the daily chart. So if you're looking to take a trade there, you have your reference for a stop loss. You just simply try and put it below the low of that candle, because reversal candles or engulfing candles should signify a change in trend. You can quite simply put the stop loss below that recent low, and then obviously formulate a target on the upside where the risk reward is favorable for you to do so. So we've put a target here of 110.19. That's where we've identified some potential resistance. So from a risk reward perspective, if we're taking a long on the close of that bar on the daily candle, placing a stop loss there at 104.50 and targeting a move all the way up here to 110.19, you can see the risk level is obviously from the high of that candle down to the stop, and the reward level is from the high of that candle all the way up there. So the risk reward is very favorable in that instance. So the trading of it, obviously we've discussed the entry. You take that on the close of the engulfing candle, and because it is a reversal candle, the stop loss should go below the low of the large blue candle that we've identified as the engulfing candle. In this case, as we said, a stop at 104.50. This isn't a true reversal if the low gets taken out, so that's why we can have our stop at that level. It won't be a true reversal because clearly it's going to continue going lower if it starts breaking that low. Now, as we can see here, we've got, so I've actually got the risk reward written down here. The ticks target was 479 from the close on that bar, with 110 tick stop down to 104.50. So the risk reward profile on that is actually 4.35 to 1. And as you can see, in this instance, trading the engulfing candle in isolation worked out to be quite a nice trade indeed, with a 4.35 R winner. So let's take a look at the bearish engulfing. So this is a 4-hour chart of euro dollar, again back in simpler times, back in January 2019. And as we can see, we've got this formation of an engulfing candle here. So let's just talk through that. We've got the prior trend moving higher. We've made a new high above this candle here, and then the sellers have got hold of it and dragged the price lower to close below the low of the previous candle, completely engulfing that previous candle there and forming this bearish engulfing candle. So we've seen 3 days of consecutive gains. We then get this reversal, and obviously we can look to trade that now with a stop loss at 115.18, which is above the high of that engulfing candle that we've identified. And when you're looking to trade these, obviously you want to put your target levels at nice levels where the risk reward is good, as we've discussed on many occasions previously. And because the bearish engulfing reversal is a reversal pattern, the stop loss should go above that high. If it's invalidated or breached, then it isn't a true reversal that we have, and therefore we don't want to be in that trade any longer, because the underlying trend, as we established here, is bullish. So if it then goes on to break that and make a new high, then there is every chance that will be a continuation higher. So in this instance, by placing a stop loss just above that high and targeting a move back down to the recent swing low, we have 34 pips if we had taken the trade on the close of the 4-hour bar. So that from the close of the 4-hour bar to that stop loss is 34 pips, and to that target that we've identified at 112.89, that is 195 pips. So a pretty nice 5.86 to 1 in terms of the risk reward ratio. And it just took over 11 days to achieve that. So a very nice one. Again, traded in isolation. Now I'm going to talk about combinations, because trading engulfings in isolation isn't necessarily the best approach. They can work. I've obviously shown you 2 examples where it worked very nicely, but in reality, they don't all play out as nicely as that. So I would always urge you to try and use them in combinations with other levels in the market. So that may be a retracement level or a projection level using Fibonacci's that you've identified. It might be just a basic support and resistance level. You could use them in combination with moving averages, pivot points, or trend lines. There are excellent opportunities for a good risk reward by using the engulfing candle in combination with other levels that you've identified. I'm just going to chuck up an example here, which I've drawn out for you. So this is a how you could potentially look to trade an engulfing. This would be a a nice setup, and something that certainly would excite me if I was looking to trade an engulfing candle. So let's start by forming a trend. So we can see here we've moved lower in this instance. We've got a downtrend that has been established. So now what we're looking for is to find some resistance to potentially sell into. So we formed a swing high there. We can identify that as a resistance level. It may also line up with some sort of Fibonacci level as well, or any other level that you use, pivot points. Obviously, we've all got our favorites. So then we see a swing back higher towards that resistance level. Now, started drawing candles rather than drawing the whole thing in candles, because I'd have been here all day trying to do that. But we've seen a candle approach this resistance level, hit the level, and then come off. We then post this engulfing. So from the close of this candle, we've seen a push through the resistance level to make a new high. And then the sellers have come in and sent it all the way lower to engulf the previous candle. So what we have here is an engulfing candle and a swing failure. So we've tried to get above this previous swing high, we failed, and at the same time engulfed the previous candle. So for me, that would be a fantastic opportunity to sell short. Now, you don't obviously get these opportunities if you're setting limits in the market, of which is absolutely nothing wrong with. So you have to obviously be a bit sharper-eyed when trying to follow these, particularly if you're trying to capture those traps or those swing failures. So in this instance, if you have been watching the market, you've identified a decent resistance level in the market, you've seen a nice push above. What you're getting here is an additional bit of confirmation. So you might really fancy this resistance level, but you're getting the additional confirmation here with a reversal candle. So what you can do is put your stop above the high of that candle. You've identified your support level on the downside, or where you think it could potentially target. You've got your stop level there, you've got your target level down here. So you've established your risk. Your risk is if you sell on the close of this candle, you've established that the risk is up here. You've identified your potential reward, which is down there. So you can clearly see you've got a really nice risk reward trade set up there. And a nice setup to trade an engulfing candle. So that is obviously just an example of where you could potentially use them. Use them in combination with other support and resistance levels that you've got. They just add that extra bit of added confirmation and a really nice candle to keep your eye out for when you're trading on any time frame. Hopefully that was useful. Again, contact details if you have any questions about what I've just gone through. Please feel free to get in touch. We will be going through various other candlestick formations and setups in the coming days and weeks. And I'll leave this one with you for now. Enjoy the rest of your weekend, and I'll catch you on Monday.